Hi, welcome again to another edition of Market Analysis for today, July 11th of 2025. I'm Gio Benacourt, and this is a recording done by Vantage Markets, but about 45 minutes prior to the USA session open. And what a week we've had. Obviously, we began the week with a gap down on the indices, and then we saw how on Wednesday we came in and revisited that all-time high. We saw how this week NVIDIA hit $4 trillion on artificial intelligence optimism. We saw how yesterday Bitcoin reached 119,000 for the first time. So for those skeptics about Bitcoin being demise, is obviously not happening. And then we obviously have all of this tariff deals going on, and regarding copper, tariffs hit on being hit on copper. Copper spiked. So there's a lot of things that are happening that will cause FOMO, fear of missing out. So what we need to obviously come in, analyze the markets with a cool head, and come in and look at what we have in front of us. So don't be reactive to prices. Obviously, we want to be taking what the market gives us. And what we're seeing in this daily candlestick chart is that the market has actually obviously created a plateau, a double top. So the market has taken profit from that, has taken all this scenario from tariffs deals, and looking obviously traders looking to take profits from that. And we saw how today and during the London session the market opened up and traded lower. It recovered, but now obviously is in that recovery mode again. So what looking back, we can find that after the market making this plateau, or obviously hitting this ceiling here, this resistance level, it has come back down towards a previous level of resistance, which obviously now is support, where it has rebounded off of, and looking obviously to retrace. We are obviously in earnings season, earnings season right now. So will we continue to see the markets continuing to move higher? A lot of rhetoric is behind what could be in regards to interest rates. Is Powell going to be cutting them? If he does cut interest rates, that's good for the indexes. But if he doesn't, obviously that'll be bad. If we see the unemployment rising, that will put pressure on the obviously on the Fed to cut rates. So there's a lot of things that we want to be able to figure out and take a look at where we can see the market going. So we are obviously, again, we are in new territory since last week, making this high, and then on Wednesday we hit a new high, so a high of 23,110 prior to 23,099. So that new high, the market obviously has retraced all of it in 2 days. So will the market come to us and say, okay, we're gonna finish the week strong and come back and revisit that high that we created on Wednesday, or are we going to close within the range of Wednesday? So basically, we have those two levels as for resistance and support. So the next level of support that I'm gonna select, I'm gonna look towards my left and see a psychological value of 22,800 makes sense to me. So that's where I'm gonna set my level of support for the NASDAQ. All right, let's take a look at an hour chart to see where the market has fluctuated around. We've seen that continuation of a breakdown, the market hitting that low, bouncing off the 50-day moving average as a dynamic resistance, hitting the lower part of the Bollinger Band, and again looking to revisit or looking to come up to that 50-day moving average, which is intertwined with a 20-day moving average. So we can come in and speculate that if the market is creating a momentum to the upside, we first need to obviously trade above the moving averages, come back towards it, and then see if it'll rebound. Or will come towards it and again do the same as this. So you want to be looking for V-shaped scenarios, and here this is where one could be happening. Now, real quick, there's a tool that we can use, and it's called the pitchfork. And the pitchfork is used to give us a projection of where the market could trend. So we want to be in a downtrend, which is basically what we're seeing today. We want to select a high. So let's use this high, which is it hit the 50-day moving average, then a low, and then where the market is at so far. So this. Now, this shift, the shift fork has different levels or different aspects of it. You want to be able to have this medium line within the market fluctuation. So you want to come in and select different ones. So you see how it changes. Maybe that's not the one. Maybe that's not the one. And maybe we want to be able to, let me see. And maybe the inside will be the one. All right, so we have the inside. So the pitchfork, the medium, or the middle line is where it's like a pivot point. So as the market fluctuates above it or comes towards it, it rebounds, and then these lines are like level of resistance, and these lines are like level of support. So you will say that if the market does continue to move higher, then this upper line will act as a level of resistance. So therefore, the market will turn and then come towards the pivot point or the middle line as the market continues to fluctuate higher. Okay, or if the market happens to fluctuate lower than the middle line, then will it come down towards the bottom line, come and do this. Obviously, as the market breaks this lower line, then we need to change the use of the pitchfork. But that's just one. I'll do in the future a webinar about the pitchfork. But anyhow, let's get back into our trading. So we also want to be taking a look at possible, obviously, trades that we see. The Bollinger Band obviously shows us how much of volatility is being applied or is being seen in the market, and usually the lower Bollinger Band or the upper are levels where the market will rebound, and so we could take trades off of those levels of those bands, and the target will be the medium point. So let's see if the market will continue doing that today. So as for the Nasdaq, let's take a look at the rest of the markets. Then we have the S&P 500. So the S&P 500, that blue line again is the pivot point that we used since Monday, and I said that the pivot point is a typical price, which we obtain it by adding the high, low, and the close and dividing by 3, and that would become a pivot point. And the pivot point will indicate that the market will fluctuate around it, and it has done so this week. So we see how the market, this is since here, when we open gap down, and the market has fluctuated around it. You could every single day you could adjust the typical price for each day. So that's that. But now I'm going to erase that line and just leave it as is. And again, let's take a look at where we could probably come in and find those levels of support and resistance. For the S&P, the range is not as wide as the NASDAQ. And anyhow, I'm going to use that level for resistance, and then 63.60, quite high, but I say 63.50. That's the level of resistance. Support, almost the swing low of today, and then 62.60, which touches 1, 2, 3, 4, 5, 6 towards my left, as many candles as possible. So let's see if this will actually. So as a daily, if you're trading, the lower the time frame, the less risk. So obviously you want to be able to take a look. If you want to take a less risk, look into lower time frames and look at opportunities there. So what will be the direction of the markets today? Again, looking for the market to come in, revisit those highs that we've done. Looking for the market to close strong the week. So I'm 50-50 actually on buying or selling the markets. Here we have the pivot point for the Dow. As the Dow continues just to really trade sideways, and we are within yesterday's range again also, I'm going to actually leave the same levels of support, bringing down my level of resistance to yesterday's swing high, and see where the market could take us today. Crude oil. So crude oil again was a sell-off yesterday. 66 will be our level of support. 66.5, which is basically yesterday's, actually a bit lower than yesterday's swing low. I'm gonna use for resistance this swing low here and the 20-day moving average. It did open with a tiny gap up. It was closed. It fluctuated higher. So I'm actually thinking that looking at this and looking at crude oil probably fluctuating sideways or just around the 67 marker. Nat Gas. Let's take a look at Nat Gas. I raise that line here. So it penetrated. I'm actually gonna update to this swing highs. Gonna leave the same level of support that we have here. I'm actually gonna bring this one up a bit more. Quite some swings that it had the previous days. I don't see that much volatility being happening on it today. So flattish really with Nat Gas. Gold. So gold is spiking, taking a nice move to the upside. It's been able to close above 3,300 for the week. So that's a positive side there for gold. So let's see if it'll come back and continue with a momentum to the upside. It has peaked above 50, the 50 marker. So that's a good indication that momentum to the upside is sustained, or actually being built. So silver, up and gap up, has been closed. So momentum to the upside is favored. Looking for opportunities to buy. Let's use that in the 20 moving average as support. Resistance 38. Psychological round value. And then I'm just gonna 38.20. Perhaps since it is the weekend, it has profit taking is taking place. The gap has been closed. So the first initial dynamic support will be the upper Bollinger Band at around 37.40. So let's see if the market will rebound from there, reverse, this movement that is taking place right now. So we have here copper after making that parabolic movement. It is retracing somewhat now, but both the other metals are moving higher. So let's see if copper if this is just profit taking and did repositioning itself. It was walking the upper band. It has fluctuated below it now. So let's see if it'll find some resistance, or if it has found that support at 540, and then is in recovery mode. The first initial level of a dynamic resistance will be the upper volume band of around 551. Bitcoin, look at it, just jogging along, 120,000. Next level, psychological. I'm just gonna lose 121-ish. Let's see if that will be the 112 initially of support, and then this. Oh wait, this is the line I need to 112-ish, and then this double top around here. So momentum to the upside is on the side. It has entered overbought territory on the other side, but hey, 120 is right there. So psychologically, it should be touched. Well, it could be touched. So the euro, let's see if the euro will be able to close the week above 117, where it has been looking to sustain itself throughout the week. Dollar index could put more pressure on it if it continues its recovery. Let's see what happens. The pound got pounded. So 50-day moving average is right there, so I'm gonna use that as support, and then 134.5. Initially, I'm gonna use that 20-day moving average. So within is the range is between two moving averages: the 20 moving average, which is the medium line of the Bollinger Bands, and the 50-day moving average, which is the yellow line. So I'm gonna let's see if that will be those levels where the pound will look to close above or below, or stay within. Then we have the dollar index. So the dollar index, will the dollar index do a higher fluctuation? I'm going to look to my left and see here this levels, and then I'm going to use yesterday's swing low. So the dollar index does continue to recuperate, then we'll see pressure on the currencies, and then obviously hold off on the metals. That's it for today. Have a great trading. Have a great weekend. Have a great trading day, and I'll see you Monday.